Welcome to the December 16th, 2024 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. Federal Reserve is leaky. All these guys are bankers and they talk. Billions of dollars floating around in the Treasury market. So here's a question. Why would the T-bills plummet in yield this week? Well, you see, the Fed has a target and they dictate the Fed funds rate, which in turn dictates the 90-day T-bill. And the rate goes from 4.5%, boom, to 4.2. What is that? That is a prediction that this week the Federal Reserve will cut the rates by another 0.25% because they dictate the Fed funds rate and T-bills usually follow that. Well, no, T-bills led it back in September. Look at this. That was before they cut rates by a half. And you can see they went down by a half. Right? So somebody is communicating ahead of time to the billions of dollars in the institutional treasury market what the Fed's going to do. I'll tell you the most important part to this. One is the long rates actually moved up this week with the 10-year Treasury at 4.3, or back up to 4.3. So now your yield curve's starting to look normal, right? You should get paid more if you commit to a 10-year Treasury than a 90-day T-bill. And the yield curve is normalizing. That's one of the forecasts for 2025. Short rates keep coming down, long rates stay the same or go up. Well, you can stand on your head to figure that one out, but you should get paid more for a longer duration, which can go down in value if the rates do spike. But the Federal Reserve already told you. Now next week we're going to bring you the updated forecast. Be sure to subscribe so you get notified. Federal Reserve publishes the 3 years ahead on their Fed projections. They're going to update them Wednesday, December 18th, when this is predicting they will cut by a quarter. We'll see if that's correct this time. I doubt all of those billions of dollars directed by institutional treasury guys who are also bankers that know the Fed, I doubt that they would get it wrong. They certainly got it right here. But it's not the most important thing whether they cut or whether they're, are not going to cut. Don't get lost in that debate. They told you back in March when the rates were up here at 5.3 was their Fed target rate, or 5.2. Well, guess what? They told you that they're going to go to 3 or below over the next 3 years. That led to what we're seeing right now. A great bull market. Net present value of future cash flows increases if you lower the comparison rate for good, safe cash. And that's exactly what's happened here. 18.6% for the Dow so far this year. A little setback at the end of the week. We're down about 2% over the past week on the Dow. But this 45,000 was a lickety-split post-election euphoria for deregulation and taxes not being increased. At the same time, deregulation leads to productivity, which is likely to increase profits next year at a better rate than the current 8%. So that explains part of the rally. But the Fed told you this back in March. And who else told you? Well, YouTube McGowan Group. Wow, we brought those projections and said that's going to be good news for future earnings and high cash flow investments. And we know that they're scheduled to go to about 3%. Next week, I'll get more precise on what the Fed thinks of the economy. By the way, Atlanta Fed raised their current growth forecast this week to 3.3% for right here in the fourth quarter. And what is that not? It's not a recession. All right. Here, real estate. We promised to answer that question. The real estate market has likely bottomed. Nuveen put that in their 2025 forecast. Next week, we're going to go through all the different forecasts and some salacious possible outcomes, and we'll cover ours as well from McGowan Group Wealth Management. By the way, I'm Spencer McGowan. President, McGowan Group Wealth Management, your financial weatherman with the weekly fast-paced tour of the global financial markets built for our clients with the charts and graphs that Stephen Norris has prepared. He's head of trading here on the team of 11 at McGowan Group Wealth Management. Now, 31%, that's a good year, but it all happened in the fourth quarter. This group of Texas banks has forecasted that commercial real estate crisis centered in office and some multifamily, that crisis has likely been solved by what they call private credit. That means that loans and bonds are getting easier to trade, and it's also easier to raise capital because private equity loves the private credit because then they sell it to people, and you can't get out until it's over, by the way. McGowan Group Wealth Management, we only do liquid securities, so we're not in that private equity market. Tends to take too long, and people don't like knowing what something's worth for 10 years. All right, here. So 31%. Who is this? Texas Capital, powerhouse bank based right here in North Texas. And you could see it was languishing all year. And boy, this fourth quarter woke up. They're not going to have to take the loan loss reserves. All the Texas banks got pounded along with the other regional banks. You had the regional bank crisis out in Silicon Valley, but they got pounded anticipating that they're going to have buildings that go into default and then they have to take a loss. Well, a lot of that private credit came in to also solve that issue. And offices are filling back up. People are saying, hey, go back to work. Only 9% of the federal government workers are actually in the office, by the way, at any given time during the business day. That's a whole different subject. All right, here we go. This one, 24%. Congratulations, Comerica, on your comeback. Again, the Fed rate cuts helped to make their portfolios of loans and bonds worth more, and at the same time, the looming defaults have pretty much been solved at this point and you've got office occupancy actually rising. Now, Cullen/Frost, wow, 30% gain so far this year for San Antonio-based Frost. Again, an amazing wake up in the fourth quarter, signaling that real estate has likely bottomed in the commercial space. Residential is a different subject, and we're going to cover the declines in future episodes. We're going to cover the declines here in North Texas over the past few months in residential pricing and what's happened nationwide. I'm Spencer McGowan. Thank you for joining us. You can go to networthradio.com. Contact the team that cares. We serve affluent families right here from the Crescent in Dallas. We love to do Zoom calls, or you can come for your tour and update your plan for 2025. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the Longer Play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.